Welcome to People Making Money. I'm your host, Kevin Bemmel, and we are here every Wednesday at 12:30 p.m. Pacific Time, 3:30 p.m. Eastern Time, with an hour in for Central and Mountain, to talk about issues relating to job searching, professional success, and wealth building. So these are the sort of core topics of the finances realm of the three pillars of attainment. And that's why we spend an hour together each week talking about them. And today I'm going to talk about how to choose a financial advisor. So in prior times, the idea of anyone other than someone who was very wealthy having a financial advisor probably didn't seem very likely. So what do I need a financial advisor for, right? Maybe I need to have an insurance policy, but I'll have my insurance man, as they used to call them, deal with that. But now that, for example, most retirement plans are private, even if we have a 401k sponsored by our company, that's still a private plan. It's not a government-sponsored plan, and that 401k will go with us, or can go with us, if we leave that particular company to go to another one. So a lot of people don't know that, but indeed, you can take your 401k with you, subject to certain terms depending on the plan and all that. But in general, you can take it with you as well. If you have IRAs, of course, those are completely private because those are things that you funded yourself. And so in these days when the vast majority of middle class people have some kind of savings plan, especially retirement savings plans, so it's much more important that we have solid financial advice to help us make good decisions. And so this idea of choosing a financial advisor looms much larger than it would have certainly when I was even a young man, let alone a kid, way back in the dark ages, right? But in any event, I'm gonna talk about 8 issues with respect to choosing a financial advisor, and going to talk about them in some depth so that you can get an idea of what it is you need to be aware of when you make this decision. So I did put together a little PowerPoint. They say it's easier to learn things when we can both see and hear them. So that's what we're going to do here. Okay, this over. All right. So choosing a financial advisor. Talked about the 3 pillars of attainment. I already mentioned. The one on the wall is slightly different. I just realized finances is up here, but that's okay. Okay, so I'm going to talk about 2 categories with respect to matters affecting who you would choose as a financial advisor. One is what I call qualifications, and the other is practical matters. And when we look at the 2 categories, you'll see what I mean by these 2 different aspects of making a choice. Okay, so we're going to look at qualifications first. We're going to talk about 4 areas of qualifications: type of advisor, experience, credentials, and conflicts of interest. Okay, so let's jump right into it, and let's talk about type of advisor. Okay, so there are many types of financial advisors out there these days. Some even insurance agents these days, typically they won't call themselves, a life insurance agent. They will call themselves a financial advisor, and for good reason. A lot of insurance products these days have some kind of investment aspect to them, and so when you're being advised about insurance, aside from just the insurance part of it, there may be a significant financial part to the policy itself as well. The purchase of insurance is one part of an overall financial plan, and it's usually something that you're going to consider first, in order to protect. Well, if you have a driver's license, so you're going to have automobile insurance. You need to have health insurance. Okay, and so insurance is one of the first products that a financial advisor is going to look at as they help you develop a financial plan. Okay, so you want to protect yourself against the dire consequences of certain things, like, for example, God forbid, being hospitalized, right? So I spent a day in the emergency room a few weeks ago, and that one day cost I want to say somewhere in the neighborhood of like $15,000 or something, right? And that's a lot of money. I mean, no matter how you cut it, right? But that's what we have, medical insurance for. So getting back to types of advisors, what the areas of expertise that an advisor has, it will be one of the key factors in determining who you choose. Okay, so the more sophisticated your financial situation is, the more sophisticated the skills of the financial advisor will need to be. Okay, so for someone kind of typical middle class, right, where we need some insurance, maybe we have a couple of retirement accounts. So someone who has experience in those areas, that's what we're going to be looking for, as opposed to someone who's got maybe several $1 million in assets, who at that point probably needs to be looking at a wealth manager. Okay, while some people like to manage their own investments, if you're working, if you're a professional, or you have your own business or whatever, so it may be difficult to manage your finances, manage your investments, and also take care of your professional responsibilities or run your business. And so in that case, it may make sense to get a more sophisticated financial advisor, what's oftentimes called a wealth manager. Okay, and in that case, they're going to oversee your portfolio or whatever it is that you've got, typically excluding real estate. Okay, but they're going to oversee all of your financial investments. Okay, they may or may not handle your insurance for you. That'll depend on the particular company. Okay, and by the way, if you have a very complex life, you may decide to hire what's more like a business manager, someone who's not only going to take care of your investments, but also take care of your, monthly payments, those kind of things. And a business manager, they may have a part of their organization that manages, real estate as well. In fact, they may have a service where they'll take care of repairs in your home. So, again, as you raise the amount of wealth and the size of the assets that you have, so then the types or the options available to you expand as well. And so when you're looking for a financial advisor, I think the first thing to do is make a brief summary. Okay, what do I have to be managed, and approximately how much is it worth? Okay, and if you've got, maybe you have a couple of $100,000, or maybe you have $50,000 in a retirement account, something like that. So then, I have a friend who works for Transamerica. I have a friend who works for Primerica. Someone in that category, that's what they do. They work with the typical middle class person, and they have a fairly broad range of knowledge and skills to bring to the table in order to make sure that they can take care of people, in that range. Okay. Now, some companies, as you build your career and build your wealth, so that they may be able to, like Primerica, I know, offers wealth management services as well. And depending on who your representative is, they may be able to offer you those services as well. Now, keep in mind that the type of advisor you have, the skills that a particular or the services, I should say, that an advisor can offer is going to be constrained by the licenses they have. So a lot of states, for example, require that advisors have a life insurance license. Okay, some states require that they have a different license to sell what's called casualty insurance, things like home and auto insurance. Okay, if they're going to sell any kind of mutual funds, even for retirement accounts, so then they're going to need to have securities licenses. And if they're going to sell managed products like wealth management, so then that's an even another security license. Okay, so when you talk about type of advisor, sort of a sub part of that is, what licenses do you have? Okay, because that will also tell you some other information, and we'll talk about that in some of the other qualifications. Okay, but it will give you an idea of how broad their knowledge is. Okay, so that's type of advisor. Next is experience. In this case, we mean I'm talking about both the quantity and the quality of an advisor's experience. So for how many years have they been a financial advisor or been in, financial services? So somebody may have been, dealing in insurance for 10 years, and then in the last 2 years, they've expanded into offering mutual funds, those sort of things. Okay, so what is their overall experience? What is their experience in the various areas where you need help? Okay, and what is their experience with clients like you? Okay, so excuse me again. If you're a high net worth individual, so what amount of assets does this particular financial representative have under management? Okay, is it 10 million, which actually isn't a whole lot? Is it 800 million? Okay, that's very substantial, right? Some of the top ones, of course, will have billions of dollars under management. I'm talking about individuals now, not large asset management companies like Brookfield or whatever that may have hundreds of billions of dollars under management. But for an individual financial advisor, okay, there are some that have even $1 billion or more under management. Okay, so that's if you're a very high net worth individual, that's the kind of financial advisor that you're going to want, or wealth manager that you're going to want. On the other hand, someone at that level, if you're just starting out, that probably is not the right individual for you. Okay, because it's going to be very hard for them to justify spending the kind of time with you that that they need to spend with their wealthier clients, number one. And number two, it may be a long time since they've dealt with the kind of issues that you need to deal with. And so while they may have had experience in that 20, 30 years ago, things have changed substantially in that time. And so they may not necessarily be up to date. So to give you an example, I had a meeting yesterday with a young woman who's with an annuity company. And we were talking about how the annuity business has changed so much over the last decade or two. So, what annuities were when I was a young man are completely different than they are now. Okay. In fact, I'm going to try and get her on a future show, because annuities have become a bigger part of financial planning for middle class people, whereas annuities used to be thought of as something really only for the wealthy. These days, there's so many options in that category. Okay, so what is the length of their experience? What is the length of their experience within the types of services that you need? And what is their experience dealing with clients who are similar to you? Okay, take all of that into account. Ask those questions. Okay, next, credentials. So credentials come in basically two categories. I mentioned one of them a few minutes ago, and those are state and essentially federal level licenses. Okay, and the other are essentially credentials from private organizations. So I'm going to take the second one first. So you may have heard of what's called a CFP, Certified Financial Planner. I remember when I was much younger, my mother decided she was going to get the CFP designation, and it's a lot of work, lots and lots of classes, exams, and you really have to know your stuff in order to get that designation. Okay, so that designation comes. Off the top of my head, I don't remember the name of the organization that gives it, but it's not a government entity; it's a private organization. Okay. Other types of credentials. There's a chartered financial planner, which I believe is out of England. And then you could have someone who's a CPA. Okay, obviously a CPA is certified public accountant. That doesn't necessarily mean that they have expertise in insurance or securities or whatever. However, they have experience in taxes probably, and that could be a key part of what you need in a financial advisor. Okay, and then there are designations like that you can get for insurance. I think the CLU, I think it's called Chartered Life Underwriter or something like that. So those are all designations that an individual earns typically by taking classes, passing exams, okay, and earning. It's sort of like a certificate. It's almost like, I don't want to say it's like getting a college degree, because you're typically not going to school, for 3 or 4 years. But the level of the classes are typically at kind of the college level, and you take several of these classes, and then you get that credential. So the other side of credentials is the one I was talking about earlier, and that is state licenses and things like security licenses. So I talked about state licenses a little bit. It could be anything from a life insurance license, a casualty insurance license. If someone is involved in real estate, they're going to have a real estate license, whether it's to help people buy and sell properties, whether it's to manage properties, whether it's now this wouldn't be a financial advisor per se, but if someone is appraising property for federally related transactions, so that person is going to have an appraisal license. Okay, if they're arranging loans, a person has to have a mortgage license. Okay, so those are all. Well, most of those are state licenses. I think the mortgage license is now a federal license. And I think you have to have both a real estate license, state real estate license, and a federal mortgage license to work for a mortgage lender nowadays. Okay, but in the general category of real estate, insurance, those are state licenses. Generally speaking, you'll take some kind of training. Typically, it's really more oriented to passing the exam. Okay, and then the person takes the exam, they have to pass. Okay, and then usually they'll be fingerprinted and run through to see if they have any kind of criminal record that would prevent them from getting the license, and then the license is issued. Okay, and if it's going to be too small for you to see, I think, but right here's my list of licenses, right, and among them is my life insurance licenses right there. Okay. Then there are securities licenses. Now, they're not. This was a misnomer I had, way back when, that the Securities and Exchange Commission issued security licenses. That used to be the case quite some time ago. Now there's an organization called FINRA. And please don't ask me what FINRA stands for, financial something or other, blah, 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 blah. So FINRA issues licenses that have a nationwide scope. So, for example, a Series 6 license that would allow you to sell mutual funds. Okay, no matter where you are in the United States, if an advisor is going to sell mutual funds, they need a Series 6 license. Now, some states require them to have a Series 63 as well. Okay, now the Series 63, the test is administered by NASA, not the space organization. That's the NASAA, National Association of Security Administration Association, or something like that. For example, here in California, financial advisors that sell mutual funds have to have a Series 6 and a Series 63. Okay, now you'll see that under the list of FINRA license designations, you'll see both of those. But in fact, FINRA manages the Series 6 test, and NASA manages the Series 63 test. Okay, so if a financial advisor sells individual stocks, they have to have, I believe it's a Series 7. Okay, so part of checking out a financial advisor is what credentials does that advisor have, and do those credentials actually allow that advisor to offer the services that you need. So if one of the things you want from an advisor is help with your retirement plans, which probably means you're going to be buying mutual funds or maybe ETFs, exchange traded funds. So that financial advisor has to have those 6 and 63 licenses in order to be able to advise you. Okay, and in fact, in order to be able to solicit business from you. Okay, so a person who is trying to get your business, even if they don't get the business, they still have to have the licenses just to talk to you about potentially being a customer. Okay, so if someone is looking to get your business as a financial advisor to help you with your retirement accounts, and you say, hey, by the way, what credentials do you have? And they're like, well, I got an insurance license. Oh, and I mean, do you have any FINRA licenses? No, I don't. Okay, so that's probably not someone you want to do business with, because they are soliciting business from you that they're not allowed to solicit, right? So, not something you want to do. Now, by the way, you may have someone who's, new to the business, and maybe they have their life insurance license, and you're talking to them, and you're saying, I want help with with my, managing my retirement accounts. So they may say to you, you know what, I'm not licensed to do that, but my colleague, Bob, is licensed to do that. And I work with Bob so that in situations like this, Bob can come in. So if that's something you want to talk about, either, let me get Bob on the phone, or let's set up another meeting so that I can introduce you to Bob and he can talk to you about that. But since I'm not licensed in it, I'm not permitted to do that. Now, that's perfectly legitimate, by the way. Okay. And oftentimes financial advisors will work in teams. So, you may have someone who specializes in insurance, all different kinds of insurance, okay? And they may be teamed up with someone who is an expert in retirement accounts, right? And so they're going to offer you kind of a team service. So it's not going to be just one individual. Really, it's going to be more of a firm-wide effort to take care of you. And that may be, you know, a good solution as well, okay? So I should have mentioned this when I talked about type of advisor, but it doesn't necessarily have to be one person. It could be, you know, a group of two people or a group of people. Okay. All right. So that's credentials. Okay. And then the last qualification is conflicts of interest. Okay. So a financial advisor is going to be working in what's called a fiduciary capacity. So for anyone who's watched any of my shows, that term comes up fairly frequently, because anyone these days who is in this sort of advisory capacity, especially if they operate under any kind of license, is typically operating as a fiduciary. Now, what that means is they must put the best interests of their client above their own. Okay, so for example, let's say that you're talking to a financial advisor about life insurance, okay? And in talking about the different life insurance products they offer, one of those particular products may be better for you in terms of what you need, but another product may give them a larger commission, okay? Their fiduciary obligation requires them to sell you the policy that's right for you, even though it means a lower commission for them. Okay, if they were to sell you the higher commission product that isn't as good for you, that would be a breach of their fiduciary obligation. Okay, so when we talk about conflicts of interest, okay, there could potentially be situations where their fiduciary obligation comes in conflict with taking care of you, and that could potentially be a problem. Okay, so this needs to be addressed up front, okay, before you agree to work with any particular financial advisor. Okay, so for example, the company you work for, they may have a financial advisor, okay, that handles the company's retirement plan, okay, and that's great, okay, and then you may be looking for someone to help you with your personal financial planning, your personal situation, okay. Well, so if the company's financial advisor runs the 401k plan, and you're a member of that 401k plan, okay, that may not be the best situation to have them representing you as an individual as well, because there's a conflict of interest there. So, for example, you may have all of the assets of your 401k in the stock of the company you work for, okay, and that may be convenient or good for the company, and the advisor, may want, it may be in the advisor's best interest to keep those 401k funds there. However, it may not be in your best interest for you to have all of your 401k funds in the stock of the company you work for. It may be better to diversify them. And look, a lot of this will depend on what the 401k allows and all of that, of course. But there may be a conflict of interest there, where on the one hand, they're working for your employer, on the other hand, they're working for you. That may not work out so well. Okay, so those are the kind of things that you want to be on the lookout for. Okay, and I'm gonna talk about another potential conflict of interest in the next group, but it'll make more sense when we talk about that particular issue there. Okay, so let's move on now. All right, so now let's talk about some practical matters. These are not the qualifications of the individual. These are the practical matters associated with, getting you taken care of, making sure you're properly served. Okay, so I'm going to talk about four things again. Four things again. Four things again. Investment philosophy, communication style, fee structure, and availability. Okay, so let's start with investment philosophy. So some financial advisors have a particular investment philosophy that they work with. Okay, and that's the only philosophy they go with. And that's fine. Okay, they're most likely going to disclose that up front. Now, if that investment philosophy meshes with your own, or it's a philosophy that works for you, great. But if it doesn't, then that particular financial advisor is not the right person to be working with you. Okay. Now, other financial advisors, they talk to a client and figure out what is the correct investment philosophy for this particular client. Okay, recognizing that at different stages in people's lives, there's probably a different investment philosophy they need. People have different levels of risk tolerance, which also determines what the investment philosophy should be. Okay, so when you're talking to a prospective financial advisor, it's critical that you discuss with them, what is your investment philosophy? Okay, and some will tell you, well, my investment philosophy is XYZ. Okay, others will say, well, if we end up working together, so we're going to start out by talking about various aspects, such as what you're trying to accomplish, what stage you're at professionally and financially, what is your risk tolerance, what kind of obligations do you have, et cetera, et cetera, et cetera. Okay. And so then they're going to build, in essence, an investment philosophy tailored to you. Okay. Now, is it going to literally be tailored to you, like bespoke, like a suit that's made exactly for you? No, because the reality is, while everybody's circumstances are different, they're not so different that there needs to be, 330 million investment philosophies for all, the entire population of the United States. But you're going to fit into one of a set of categories for the most part. Okay. So you may be, new to the workforce, starting out, unmarried, but nonetheless, you don't have a tolerance for very high risk. Okay, that would be one category. You could have all the same things, but you have a tolerance for a lot of risk. So that'd be maybe a second category, right? And then, someone who is married and has two children, is more mid-career, and again, maybe has a medium risk or has a low risk tolerance. So that's another category, right? So that's what they're going to look to do in terms of figuring out an investment philosophy for you. Okay. And based on those different aspects, then that's going to determine, in terms of things like insurance coverage, types of investments for your retirement plans, types of investments for other, for other investments you have outside of retirement. That's going to all then play into what those are. Okay, so investment philosophy. Before you choose your investment advisor, you may not know specifically what the investment philosophy will be. All you may know is, well, the initial part of the process is figuring out what investment philosophy is right for you, the client. Okay, and that's perfectly fine. Otherwise, if the financial advisor has a set investment philosophy, then it is what it is. Okay, and if it's not right for you, then that's not the right advisor for you. Okay, next, communication style. So the critical issue in communication style is when you're talking with this person, are they explaining things in a way that you can understand them? Okay. Some financial concepts are, pretty easy to understand. So term life insurance. Okay. So term life insurance basically is life insurance that lasts as long as you make the payments and has a set term, maybe 10-year term, 5-year term, 30-year term, something like that. Okay. Typically the premiums don't change and the policy does not build up any value. So, you can pay your premiums for 10 years and what's called the policy value is still zero. Okay. That's term life insurance, right? As opposed to something like whole life, where part of your premium goes into building an investment value or a policy value that hopefully increases over time, although not necessarily. It depends on how well that's managed. Okay. And again, there are different philosophies about whether you should have, term life, whole life. I mean, I come from the philosophy that, buy term life and take the additional money that you would spend on whole life and just invest that directly. That's a better way to build wealth. Okay. I was excoriated by a friend of mine that, oh, how could you possibly say that? Blah, 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 blah. That's, blah, 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 blah. But in any event, you will find different philosophies. And if you're interested in that discussion, go to my YouTube channel and find the discussion on insurance, and you can see why I advocate for what I advocate for. Okay, but in any event, going back to communication style, so if you're relatively new to dealing with finances, you don't have a lot of knowledge about things like compound interest and net present value and these concepts. So I would recommend you choose or look for a investment advisor who uses language that you can understand. Okay. Whereas if you're very sophisticated, having someone talk to you in very basic language may, frankly be annoying. It's like, okay, yeah, I'm not in kindergarten anymore. I've been doing this a long time. Please, speak to me at my level. Okay. Now, that's not to say that financial advisors only speak at, one particular level, just like many financial advisors will craft an investment philosophy that is right for you as an individual. Most financial advisors will talk to you at the level that you need in order to be able to understand what they're saying. Okay. Now, having said that, if you recall my talking about wealth managers. So by the time you're dealing with a wealth manager, they're probably going to assume that you have a certain level of sophistication in financial matters. And so they may not be used to talking at a very elemental level, and they may struggle to be able to explain to you exactly what's going on because they're used to dealing at a much more sophisticated level. Okay. So that's all part of so the communication style could also be a factor as you look at the type of advisor that you look to engage. Okay. In any event, when you're talking to prospective investment advisors, financial advisors, I mean, what you want to do is, do I understand this person? You may even say, hey, I'm not a very sophisticated, I'm not very sophisticated about finances. So please explain to me a complex financial concept so I can see if I can understand what you're saying to me. I think it's perfectly legitimate to, ask that. And so, for example, explain to me how compound interest works, right? And the person should be able to do it so it makes sense to you. Okay. Now, if you're a sophisticated investor, okay, you may do, kind of a similar, so explain to me, what is an exchange traded fund? Okay. And they should be able to explain to you, what that is, how it works, and how is that different than a mutual fund, for example. You ask them these and see how they communicate with you. So you're not so much looking, for the knowledge per se, it's how do they explain these things to you. Okay. So communication style, very important, because presumably this is going to be a long-term relationship. Okay. And like in any relationship, communication is the ability to communicate clearly is an important aspect. Okay. Now, fee structure. This is obviously another very, very important practical matter to deal with. Okay. So financial advisors generally work in one of two ways with respect to fees. Okay. One way is they get fee for product. Okay. So if you buy a life insurance policy, they'll get a commission on that sale. So it doesn't cost you anything technically, okay, because the life insurance company is going to pay the commission. But of course, where is that money coming from? It's coming from the premiums that you're paying. Okay. In theory, if they didn't have to pay the commission, they could charge you lower premium. Okay. But in any event, in a product-based fee structure, okay, you are not coming out of pocket in addition to the cost of the products for the financial advice that you're getting. Okay, so again, maybe they're setting up a retirement account for you, and you're investing money in that account. So the fee for that is going to come from, the mutual fund company that they invest your money in. Okay, it's not going to come from you. Now, the other type of fee structure is what's called a fee for service. Okay, and fee for service, typically they'll charge either an hourly rate or a flat rate for the services they render. So if they spend 10 hours with you a month discussing financial matters and handling whatever transactions needed to be handled, and their rate is $200 a month, so then your fee for service is $2,000. Okay. Or maybe they charge you a flat $1,500 a month, and for that fee, they handle whatever needs to be handled in any given month. In one month, they may spend 20 hours on taking care of you, and the next month they may only spend 2, but it doesn't matter. It's $1,500 a month. Okay. Another sort of fee for service is a percentage of your portfolio. Oops. Sorry about that. They're doing a national alert today, and I figured it was going to come right while we were doing the show. Okay, so another type of fee for service structure is a percentage of portfolio value is usually how it's calculated. Okay, and the way that works is, so let's say you've got a portfolio with a value of $3 million. Okay, so you'll be charged 1% of your portfolio value, okay, for a year's worth of service. And so it doesn't matter how many trades they make, how much time they spend talking to you, meeting with you on the phone, whatever, doesn't matter. 1% of your portfolio value for the year is what you're going to be charged. Okay. And typically, by the way, it'll be calculated on a monthly basis. And so it will probably vary month to month, because your portfolio probably isn't going to literally be worth, $3 million consistently over the year. It might vary a little bit. It might go up over the year. Hopefully it does, right, if they're doing a good job. And so, but in point of fact, it's essentially a fee for service, okay, as opposed to a fee for product. Now, I mentioned a little while ago that uh, there could be an inherent conflict of interest. There was another potential conflict of interest. And you could see that in a situation where a financial advisor is fee for product, okay? And this is actually this is essentially the same example I realize now that I gave you before, where they're selling you products, they're getting a fee based on the product they sell you, okay? So not only is there an incentive to sell you the more expensive product, I mean the product that will, not the more expensive product, the product that will yield the larger commission, there's also an incentive to sell you products you don't need, okay? Now, do product fee-based or financial advisors, do they all do that? No, absolutely not. Most are honest, and they don't want to do things like that because it's not good for their long-term business, okay? But that is for someone who is a fee for product paid advisor, that is an issue that should be raised. So, well, you're getting paid if I buy a particular product. How does that work? Okay, so how do I know that you're giving me the best product for me as opposed to the one that will maximize your income, right? And I would ask them that straight out and listen to their answer, okay? And it's probably going to be somewhere on the lines of, you know what, advisors who do that, they're not in it for the long haul, because eventually that will get discovered, and then those clients are going to drop them like a hot potato, if not see that they are disciplined by the different regulatory authorities. So I don't do that because I'm looking to create a long-term relationship. And so my business is based on serving you with what you need. And if we're talking about a particular product, one of the things I'm going to talk to you about is suitability of that product for you. And is it something that you absolutely need? Is it a nice to have? Is it something you don't really need this, but I mean, if you absolutely want it, we can get it for you, but I don't see it as being anything that you particularly need. Okay. And again, it's a reputable person, they're going to probably say something like that. Okay. But do address that potential conflict of interest in fee structure. Okay. All right. So fee structure. Okay. And now the last one is availability. Okay. So if you have a question, how do you get that question answered, and how quickly can you get that question answered? Okay. Are you going to be, dealing with an individual, or are you going to be dealing with, kind of like a customer service person? So if your financial advisor is Robinhood, I'll pick on them. They get picked on a lot, right? So you're probably not going to have a dedicated individual that you call in order to get your questions answered. Okay, you're probably going to call or send a message to a general customer service department, and someone will respond to you. Okay, that's as opposed to, say, Schwab, or which is now, I think TD Ameritrade is actually part of Schwab's now. So you're going to have a specific representative there that you can call. Okay, there may also be a general customer service line for getting a particular form or whatever, but in most cases you're going to have a specific person. That's going to be the case. I mentioned earlier, Transamerica, Primerica, those companies. You're going to have a specific person who is your financial advisor, or maybe you're going to have a team of a couple people. Okay, so what is their availability? How quickly can they respond to your questions? What are the different avenues that are available for getting questions answered? Okay, so for example, can you text message them? So generally speaking, the answer to that is going to be Unless it's to like confirm a meeting, the answer is going to be no. So like if you send a financial advisor a text message asking, what is the quote on, IBM today? Okay, they're not going to respond through text messaging with that, because a lot of companies don't allow that. Okay, so because financial service companies need to be able to track the communications of their people to make sure that they're complying with all the vast array of regulations that apply in this area. Okay, so if they say, well, text messaging, I can only deal with, this part of it. Okay, that may not be, they're just saying that because they don't want to have to deal with text messages. That may be because this issue I was talking about their company being able to properly supervise them. So if you have a preferred means, a preferred way of communicating, and a particular person you're talking to doesn't seem to be able to do that, I would ask them why. Oh, what, like I don't communicate through text messages. Oh, why is that? Well, because in order for my company to properly supervise me, we're not permitted to use text messages. Oh, so like if I'm late to a meeting, can I not send you a text message to let you know I'm on my way? Oh, no. In that case, it's fine. But in terms of any kind of financial matters, we can't do those over text messages. Okay. So can you talk on the phone? Yes. Can you use emails? Typically the answer is yes, because it's going to be emailed through the company's email system, and that way they're able to track what's going on. Okay, so figure out the means of communication, excuse me, and how quickly you can expect to get an answer. And does that work for you? Okay, I know for me, in general, the people I work with, I don't want them feeling like they've got to get back to me, the minute I get in touch with them. That's just it's too much stress for people. Okay, but on the other hand, I do want them to get back to me in a reasonable period of time. Okay, now there are other people, they want people getting back to them right away. And if you're of that mindset, then I recommend you address that issue and make sure that the person can accommodate you in the way you want. Otherwise, it's just going to be a lot of friction, and it's not going to be a very satisfying relationship. Okay, so those are the 8 aspects of, excuse me, of choosing a financial advisor. So if you have any questions, comments, criticisms, here's some of the ways to get in touch with me or get in touch with the show. We are on some other social media now. We're on Instagram. We are on Pinterest. And you can also leave comments on YouTube. So any place you want to, feel free. I do my best to get back to you quickly, although typically not within a couple of hours necessarily. I guess you can see I haven't switched Twitter to X here, but anyway, all these and others will be in the show notes after the episode posts. And then I think we've got here's the legal stuff, and here let's go ahead and stop the sharing. Okay, so that's what I have for you today on the Way to Wow show, People Making Money. Again, if you're younger and just starting out, okay, you may consider finding a financial advisor who's kind of just starting out as well. Obviously, you want someone who has the knowledge and experience to be able to help you. But if you're starting with someone who's more kind of your age, starting out, you can grow together. Okay, so this is not to take away business from old guys like me, but if you're just starting out in your career and you're going to be dealing with finances for another 40, 50 years, so do you want to be in a situation where at some point you're going to have to find someone new? This is what happened to my mother, for example. She had the same financial advisor her whole adult life. And recently he retired. It's like, oh, shoot. And so now she has to find somebody new. Well, this actually happened, I think, earlier this year. But in any event, she has to find somebody new, and it's difficult. She's been working with the same person for literally decades. He knows her very well. She knows him, and so it was a very nice relationship, one that was a very easily workable. And now I don't want to say she's starting over completely, but it's going to be creating a new relationship. So if your advisor is a lot older than you, that's more likely to happen than if someone is more kind of your age peer, and so you can grow together. So that is what I have for you today, and this is the last episode, my last show for this week. So we will start the cycle again next week on Monday at 10 a.m. with Trusts and Estates Weekly. And then Tuesday at 11 a.m. These are all Pacific time, business lessons from the military. And then a week from today at 12:30 p.m. Pacific time will be the next edition of People Making Money. So I invite you to join me again next week and every week, really. Hope you enjoy the information. Hopefully it's helping you with your professional and financial life. And just a quick note, if you are not a subscriber to our YouTube channel, please do consider subscribing. That way you will be notified anytime a new show goes live and or posts, and you'll always be the most up to date with all of the Way to Wow shows. So I thank you very much for joining me. Wishing you a wonderful rest of the day and a good rest of the week. To my Jewish friends and viewers, wishing you a happy wrapping up of the holiday season. And that just leaves me to sign off by saying, Marie, darling, you are my belle, as always. So thanks again for watching. Look forward to seeing you next week.